StoneCo is down almost 90% from its peak, but revenue is up 6 times since IPO. The number of clients has increased 10 times, and there is still room for growth. If you look at the stock price, you can see that it's even lower than its IPO. And in this stock analysis, I'll help you see their business model, their fundamentals, what opportunities they have, the risks, and at the end, I'll talk about the fair value of StoneCo, whether it's a good buy at the current price. There are many great businesses out there, but only a few are great investments. My target is to find those investments where I can double my money in the next 3 to 5 years. So let's see if StoneCo can be such an investment. Let's begin. StoneCo is a fintech company from Brazil, and their business model is like this. StoneCo offers payment solutions to merchants in Brazil. They have a system that allows merchants to accept multiple payment methods. For instance, StoneCo offers merchants a POS and charges a fee for the total volume of transactions. That fee is adjustable, and now it's about 2%. Same for online payments. StoneCo offers a system that allows merchants to accept multiple payment methods. Moreover, StoneCo offers software solutions to businesses to help them manage their resources better. It's about those ERP solutions, or Enterprise Resources Planning. StoneCo offers a subscription service that depends on the merchant's needs. The price can increase depending on the modules the customers want to acquire. Now, besides those operations, StoneCo offers banking services, where it offers prepayment services. Customers can pay for their orders in multiple transactions, and StoneCo charges a fee for that service, plus other services. They started to provide loans to businesses in 2021, but because interest rates went too high, they stopped that program, and hope to launch it again next year. Plus, StoneCo keeps investing in different software companies in Brazil. You can better see their operations in this chart. Transaction activities are the segment where StoneCo charges a fee for the total volume of payments. Subscription services represent the software segment, where StoneCo offers a subscription service, plus they rent some equipments. The next segment is financial income, where StoneCo offers banking services, as I said about that prepayment service. And the last segment, other, is about the interest they get on the money they hold in the banks. So StoneCo has built an ecosystem where customers can have access to all the services they want. Now let's take a look at their fundamentals. StoneCo has a market cap of about 3 billion at the current price and pays no dividend. Revenue keeps growing and is expected to grow even more in the future, from 1.3 billion to 2.6 billion by 2024. Now, the stock price went down so much because they had a loss in 2021, because interest rates went up too fast and they couldn't adjust their credits. That's why they stopped their service. Plus, the entire market went down, and that's why you see that huge decline in the stock price. Now, I do believe this business can rebound, and I'll explain later why. Analysts expect earnings to improve, and if StoneCo keeps growing, you might see even higher earnings than 200 million. Total assets are about 7.6 million, of which cash is around 971,000. Total liabilities are about 5.1 million, of which debt is around 895,000. So StoneCo doesn't have a lot of debt, as earnings are expected to improve, they'll do well. Now let's see what the opportunities and risks are. There are more important indicators you can track to see the performance of StoneCo. The first is active clients. StoneCo currently has around 2.3 million customers, and there is still room for growth. The next indicator is the total payment volume, where StoneCo charges a fee around 2%. This depends on their adjustments. So these are the indicators for their transaction segment. Now if you look at their banking solution, you can also see that their clients are growing. StoneCo has about 561,000 clients, the total volume of payments is also increasing, and the client deposits. The question you should be asking is how much can StoneCo grow? Let me show you. StoneCo has a market share of about 11% for their payment service, 1% for the digital banking, and about 13% for the software solutions. Keep in mind that their banking segment or financial segment represents about 48% of total revenue, and as StoneCo only has 1% market share, there is still a lot of room for growth. Moreover, StoneCo can expand their market shares for software solutions as they are a leader in Brazil. Plus, their payment segment can still grow a lot. Why? If you take a look at this picture, you can see that about 65% of Brazilians have debit card, and for credit cards, that percentage is even lower, of about 40%. So StoneCo has tailwinds from the digital economy. More people will have credit cards. Plus, StoneCo only has 1% market share. Now let's see the risks. The risk is the interest rates. You already know this problem. Rates went up too fast, and StoneCo didn't adjust their prices, because they want to focus on the customer first, and it takes some time for them to adjust their prices. Plus, they took more risk with their credit service. They want to start again, but this time more conservatively. Now the good part is, if rates decline, StoneCo benefits a lot. So you might see this problem again in the future. The second risk is the competition. I still have to analyze its main competitor, PagSeguro. Now, as StoneCo has built that ecosystem where it provides different services, StoneCo has an advantage. What you can expect in the future is a decrease in their fees. If the competition lowers their fees, StoneCo has to do the same to keep their customers. But again, this depends on the services they provide, because a competitor might offer lower fees, but if it doesn't have all the software solutions as StoneCo, then clients will prefer StoneCo. Another thing you should be aware of is that StoneCo operates in Brazil, and their currency is Brazilian reais. As you can see, it has declined by more than 30% in the last 5 years. Now, StoneCo will adjust their prices for inflation. Plus, as they charge a fee on total payments, StoneCo is naturally protected against inflation. What can happen is that if StoneCo has too much cash on hand, that cash could lose value over time. But they know how to run their business. Now, tell me in the comments if you see other major risks. I've been thinking a lot about this business, what can go wrong, and maybe you can help me. Now, let's discuss about investing in this company. When you see this massive decline, you might wonder what happened, but the business keeps growing, as you've seen the indicators. Now, when you invest, you also have to see the risk, how much money you can lose, and the reward, how much money you can make. So the risk of investing in StoneCo depends on their growth. If they report a decline in their clients or lower earnings than expected, then the market cap might decline even more, to 2 billion or less. And the reward, if StoneCo improves its earnings and keeps growing, then the market cap can easily go to 6 billion. Plus, as they still have a lot of room to grow, the market cap might go even higher. How much? That depends on their growth and their profitability. I do believe that the stock price will double easily, but I still have to research more about the competition and see if StoneCo is a good investment for me. I mean to double my money in the next 3 to 5 years. So the next video will be about its competitor, PagSeguro. And tell me in the comments, where do you see this business in the next 10 years? And if you find value in this video, please give a like and subscribe to see more videos like this because I want you to succeed.